Okay, good afternoon, ladies and gentlemen. My name is Clemens Hillmer, and I'm a ship finance partner at Watson, Farley and Williams, and I'm based in Hamburg. I would like to welcome you to this panel, and I'm very happy to moderate it. Hamburg has been a capital for ship finance for many, many years, but during the last shipping crisis, we have seen more and more traditional ship finance lenders pulling out of shipping or decreasing their loan portfolios. So the question is now whether Hamburg is becoming the new European hub for alternative finance for global shipping, and will Hamburg rise like a phoenix from the ashes and become a new hub with the help of alternative lenders. One of our panelists is a bit late, namely Cruz Chi from Bocomm Shipping and Leasing. But I would like to introduce you.
He's right. He's right here.
Okay, he's here. Okay, great. Okay. So I would like to welcome our panelists. And we have three groups. First, we have alternative debt providers. Secondly, we have a representative from a Chinese leasing house. And we have some intermediaries or financial arrangers. First, I would like to introduce you to Elias Sakellis, CEO from Australis Maritime Limited, an alternative debt provider. Secondly, I would welcome Martin Hugan, Managing Director at Meerbaum Capital Solutions and also an alternative debt provider. And then we have Cruz Chi, Executive Director from Bocomm Shipping Leasing Europe GmbH, a Chinese leasing house. And as a third group, we do have Mr. Axel Siepmann, Managing Director at Braemar Naves, an intermediary or financial arranger. We have Oliver Fark, Partner and Head of Europe at Transport Capital, also a financial arranger or intermediary. And we have Maximilian Otto, a co-founder and managing director at Oceanis, and they are providing a platform solution. So let's start with the issue, what products are you offering? Could you please very briefly describe your product offerings and please describe maybe a typical transaction and the usual commercial terms, and also what differentiates you from your competitors, and also on what tonnage you are focusing. Elias, would you like to start?
Sure. Thank you, Clemens, and thank you, Nicole, as well for organizing this event. Look, we are a direct lender, and effectively we are providing unitranche bilateral financing to ship owners. This can be in the form of loans or in the form of leases. We are very, very flexible in that respect. And we are truly asset agnostic in terms of segment. We can do most subsegments of merchant shipping, and we can also do offshore. And from a size perspective, our typical transaction size is somewhere between $30 to $50 million, but we've done smaller deals, and we've also underwritten much larger deals, as some of you on the panel know as well, over 100 million. One of the key differentiating factors, and probably that goes for all the alternative lenders, is the flexibility one, and the second one is the speed of execution. At the moment, what we are able to do is go from term sheet to funding in under 3 weeks. Which very, very often is quite useful for the ship owning community.
Okay, very impressive. Thank you very much. Martin, would you like to go on?
Yes, let me do so. Our proposal is not that much different from Australis, but maybe a bit more focused. So we have usually small and mid-sized privately owned shipping companies as clients. All transactions will be leasing style, no lending. And we are generally out there bilateral, so no junior senior structures. and we have a focus on mid-sized vessels and mid-aged vessels. So typical vessels are in between 7 and 14 years of age when they come to us. In the segments of product tankers, bulkers, containers. So vessels that have a liquid S&P market, we stay away from stuff that we don't understand, like offshore. Usual tenor is around 5 years, and the client has purchase options and a purchase obligation at the end. So it's different from Japanese leasing, for example. And the typical leverage that we provide is somewhere in the 60s, can be higher, can be lower, depending on the merits of the specific project. When it comes to competitive edge, we think it's very important that you're reliable. So when you put an indicative offer on the table, that this can be converted into a binding offer of the fund providers, and that this can be done speedily. So if need be, I think we are about same speed, maybe faster, maybe slower, depending on project. As Elias just set out, our record is 13 days, but typically you don't need to be that fast. And by 13 days, I mean approach of the person who needed money to money on the table in closing.
Okay, very good.
And last thing to add, I think compared to more traditional fund providers, all alternative lenders are more willing to think outside the box and look at the commercial merits of a request of a client and see whether it's feasible or not, and not just focus on ticking boxes because there's a 200-page handbook that needs to be met.
Okay, thank you very much, Martin. Cruz, and you, what are you offering?
Thank you, Dr. Clemens Hillmer. For Bocomm leasing, we usually provide 2 kinds of products. One is financial leasing. It is a little like the traditional bank loans. And another one is the operating leasing. The difference between them is for operating leasing, we usually have a purchase option at the end of the charter, and for financial leasing, it is usually a purchase obligations. And the difference between us and our competitors is we usually will provide our long tenors, usually more than 10 years, sometimes it's more than 15 years. And the typical amount of deal is usually higher than 50 million US dollars. And for us, efficiency is very important. So usually we will finalize a deal within maybe 40 days. Thank you.
Okay, thank you very much. Axel, would you like to continue?
Yeah, pleasure. I mean, you said we're a financial advisory company. We started in 2009. Our services range from advising owners to finance new buildings, to finance second-hand acquisitions, but as well very often to refinance existing loans, especially also in stressful situations where some sort of additional capital is required. We therefore basically help people to raise both debt and equity, leasing capital. Actually, for us, it's very essential to first of all sit together with the owner and discuss intensively what are the goals, what are primary goals, what are secondary goals, and then to also think how basically the owner can position himself, how can he structure his business as to tap into the most efficient source of capital. There's now quite a wide range of capital today. We just have basically alternative capital providers on the panel, but there's further sources, and it's all about risk-adjusted pricing and making basically the offer fit to what the market actually offers. And I think that's we're very good at. So we basically track the markets with our offices around the globe, seeing what sources of capital are available. Some come, some go, and basically we bring the two ends then ultimately together.
Very good. Thank you very much. Oliver?
Sorry, apologies. Clemens, yes, thank you, and Niklas, thank you for having us and for having me here. Clemens, you rightly allocated us to the group of the intermediaries, and as Axel already explained, in our type of business, these intermediary services regularly never come without any advisory required on how to structure the request, on how to place the request for proposal, and this has lots to do with the say recent history of this financing hub here in Hamburg, given that there was a huge demand for restructuring of debt. And from that, we developed into structuring also the request for example, what I see and what we see is very promising new building orders in today's markets. The range of products we can access start with our exclusive agency we have with the German Decker Bank, and I think that Marco Albers, the head of transportation, joined one of the earlier panels and described this sort of business. So we are representing Decker Bank in the Americas, in Asia Pacific, in the Greek market. It includes what Elias has indicated earlier, that we are working together with the traditional alternative lenders. And given our roots, our deep roots in Asia, we are headquartered in Singapore. We have access to Taiwanese, Korean, Chinese, and Japanese sources of debt. So this is the scope we cover. And well, maybe it's just two more sentences on a very like unusual financing request we were just about to close. Is a quite small financing request for overaged small product tankers. The required leverage is 100%. But nevertheless, we are almost there. We have identified the potential financing party who's able to provide even such quite non-generic, I would say, financing request.
Okay, perfect. Max, would you like to follow now or close now?
Yes, thanks Clemens, and thanks to the whole Capital Link team for inviting us to join this panel. We do have a slightly different approach. Oceanis is a digital platform that essentially connects ship owners with all sorts of financial institutions. So these are banks, alternative debt funds, and leasing houses. A typical transaction for us is a small to medium-sized ship owner looking to acquire a vessel or looking to refinance an existing vessel, and is requiring 60–65% leverage to do so. He typically comes to us because he's looking for either access to financing because his existing network is not willing to finance him anymore, or he's looking to get a good transparency, good overview of the market, and finds with us a solution to get exactly that. So yeah, in a nutshell, that's what we're offering and what we're doing.
Okay, thank you very much. I think that was a very good overview. Thank you very much for this, gentleman. Now turning to Hamburg and its maybe future role. I think, Cruz, you have opened an office in Hamburg, and what was the reason for that? Why did Bocomm really come here to Hamburg?
And thank you for the question. And a lot of friends and clients ask me the same question. I think the first one is we have a lot of clients in Europe. More than 40% of our business is from Europe. And Hamburg is in the center of Europe, and it's very convenient to travel from Hamburg to all over the Europe. And then second one is I think Hamburg is also attractive to a lot of people. So it's quite easy for us to have some partners to join us. And the third one is Hamburg is still one of the most important shipping center in Europe, and you could find a lot of ship owners, brokers, and lawyers, advisors here. So it could make your business very easy.
Okay, thank you very much. Okay. Axel, Elias, why should actually Hamburg be attractive as a hub for ship finance? What do you think? What can Hamburg offer?
Well, let me start first. I mean, Hamburg basically has a lot of know-how how to arrange quite difficult financings. I mean, Hamburg's history started, of course, with the know-how how to finance vessels through the KG scheme. That, I would say, no longer is that fashionable, even though it still exists to a certain degree, but much smaller volumes. But as there was, I would say, an 80 billion bad debt problem in Germany, and you know, a lot of the participants of this panel have basically joined in thoroughly working through those times. You know, there is a lot of experience how to even get difficult projects financed, what it requires, what the criteria are. We have had a lot of people traveling from all over the world into Hamburg, looking especially at those opportunities, created a lot of relationships. And in so far, there's a lot of qualified people, even though, let's say, the German fleet shrank quite significantly, and German banks for sure employ significantly less people. You know, when you come to Hamburg, you still meet a lot of people with a lot of experience. And I would say that is a particular strength now. You know, we've been made a little tough by tough times. Yeah, and in so far, there's good grounds. But I would say Hamburg, for me, you know, it's part of a network. I mean, yes, we have a lot of know-how here. There's other cities, maritime hubs, and ultimately for me, it's not about one against the other or Hamburg being better than any other place. It's ultimately about creating a network as to find the best solution.
Okay. And Elias, you, I mean, coming from outside, can you add to that?
Yeah, absolutely. So first of all, I definitely agree with what Axel said. If you think about the European shipping hubs, and we're talking about 3 or 4 cities, you know, Hamburg, Athens, London, Oslo, each one has its own merits and its own competitive advantages. If you look at Hamburg, however, there is certainly an argument to be made that it can be a very strong hub for ship financing. And the reason is twofold. One is exactly as was said earlier, there is a long tradition, homegrown talent and experience in ship financing coming from the fact that, you know, Germany accounted for almost half of all of ship financing even almost a decade ago. So the talent that is here is unparalleled. The second reason is obviously Hamburg is very quickly becoming a high quality hub for ship management. And while the last decade has unfortunately resulted in the shrinking of the ownership ecosystem, if you like, within Germany, what it has done is it has allowed the ship management cluster to consolidate and to develop third-party management skill set at a very, very high level and very high quality, addressing both institutional but also small and medium-sized owners. And this can create tremendous, you know, origination synergies from a financing perspective. We, as you probably know, we also have an office here in Hamburg, and which we consider to be key to our platform in terms of origination. A very large part of what we've done so far with Australis is with German UBOs, even if they're not based in Germany. At the end of the day, they are German. So we definitely feel very, very strongly about Hamburg's position in this industry.
Okay, interesting. And Martin, I mean, London has also always been a very strong hub for ship finance. Do you think that Hamburg will, in a way, benefit from Brexit?
Well, we are benefiting in a way more from the exit of the German banks, because we have access to very good people that normally a small shop like us would not be able to hire, because they might stay in a big corporation. From the perspective Brexit, I think it will a lot depend on what is happening after COVID. So how will the governments react? Will they impose huge taxes? Will they deregulate? Will they regulate? And then we'll see. It's an open, at the moment, it's very open. So we could be based in London, we could be based in Athens, Paris, if you like the language. So there are many things you can do. But basically, all of us have to compete globally. And that means who offers the best proposition in terms of quality of service to the guys who actually are the funders will win the deal. And that means we are, I think, more in competition with Asia and Oslo and globally rather than just with London.
Yeah, interesting. And I mean, it's also a question, what are the most important requirements to push Hamburg? And what can we learn from other hubs like Norway, New York? Oliver, do you have thoughts on that?
Well, yes. First of all, I would like to highlight that actually whether one likes the deep story of Hamburg, and some of you have referred to that already, whether one likes it or not, at least it has given lots of business opportunities and lots of potential for you guys, for us as intermediaries, financial advisors. And I think this was one, apart from, the general infrastructure is there, and there is access to skilled human resources. This was another important factor. And now turning to your question, Clemens, this has to be further developed into a more proactive approach of German ship owners. So means looking into new building, renewal of fleets. And therefore, this is, I think, the most important step now to get this transformation done, basically and fundamentally into a more active, proactive mode than just looking back and trying to cope with the past, restructure that and find solutions with the bank or whoever held the debt. So basically, this has to be developed. Whether this is like a political issue, I'm not a politician for good, and to support this cluster. So this is the one thing. The other is, and this is also like a discussion which has been going on for years. There is no real efficient capital market, for any source, for any kind of capital, which would be eligible and accessible for shipping companies here. So actually, to develop this, it would be a big task. But this is when we compare it to Oslo, for example, in particular, this is a big disadvantage.
Mm-hmm. So
and just to agree with what Oliver said, I think, look, both the UK and Germany, if there is one thing they would look back over the last 15 years and look at it as probably a missed opportunity, is the development of capital markets for shipping, which Oslo was very, very good at building each capital market. If you look at Singapore, at the US, at the UK, at Oslo, everything has its pros and cons. But you cannot find a more accessible, opportunistic, efficient, and quick capital market than in Norway. And this was definitely a missed opportunity for other hubs in Europe.
Although I must say, I really doubt whether in Germany you will ever have a legal situation that will make the capital raising by capital markets that easy as in Norway. We will see.
But if Clemens, that's a matter of will. If you want to have the ability to raise funds and the politicians want to support it, then we could have that.
Yeah, we had in Germany these Mittelstandsanleihen, which were not very successful. But in real estate, but in general, a bit more difficult.
But I think what we all observe and what we agree on is that there is equity capital or like equity-like capital available, from German institutional investors, from family offices, high net worth individuals, which is routed in quite intransparent ways into shipping projects. So I would say the foundation is there, and obviously also there is an opinion and there is a willingness, but there is no like coordinated market, yeah. And this is something which Norway has done really brilliantly.
Yeah.
I mean, Norway, of course, has the big advantage, and Clemens, you will probably agree that, you know, Germany is part of the EU, yeah. So we just can't create a documentation standard on our own. And so far, I must say, Oslo has something that is, you know, very, very helpful in order to get institutional projects financed. I mean, and through the capital markets. And that position is there, and I doubt that, you know, that it will be that easily challenged by any other location. And so far, but I see, you know, if you look to private deals funding so non-publicly placed listed instruments, and I find that Germany, London, other, you know, places have actually a lot to offer. And let's not forget, the German tonnage tax system is very often criticized, but it's quite tax efficient even for the manager. Few people know that, you know, 4% from the time charter income that the manager basically earns is free of tax, provided that he just owns a single dime in the asset owning structure, and it's a German based structure. So that is something that is extremely competitive, I find. And so far, I'm not pessimistic about the outlook. It's but you know, the public markets, I would say clearly, if you look at Europe, that's Oslo. But for the private markets, you know, there's cities like Hamburg, other places that are quite competitive.
Yeah. And Cruz, I mean, you as a Chinese leasing house, is actually Germany and other countries in Europe, is this the right playground to be, or how do you see that? Do you have the owners here you are looking for, or you need for your structures?
Actually, we have the clients in Europe, maybe in more than 10 countries, and of course, including Germany. I think Germany is really very important to us because we have some clients here. We have some very we have some brokers in very good relationship here, and we also have to get the help from some German banks. So yeah, for us, I think, yeah, Hamburg, you know, if we choose to set up an office in Germany, and then Hamburg will be our first choice. And of course, so yeah, we think Germany is the best place for us to set up the office.
Okay, very good. And Max, actually, you're offering a new product. How do you see that? Is actually Hamburg the right place for you to be, or?
Yes, it's I think a very good place for us. I mean, we were free to set it up basically everywhere we wanted. I have a Norwegian co-founder, so we could have also started in Oslo, but I think on the demand side for alternative debt financing, Hamburg and Germany is a core market, and also will stay a core market. If you compare to Greece, I think there's more business to be done for alternative debt funds in Hamburg, because you have less competitive local banks here than in the Greek market. On the supply side, I think, of course, there are not so many Germany-based alternative debt funds active in shipping finance. So most of the fund setups are either in the US or in the UK, some also in Singapore and Hong Kong. But I think if we just, my thoughts on Hamburg as a place of business in the finance, shipping finance industry, the biggest bottleneck will be the human capital. So it's true, there's high degree of know-how at the moment, and this is of course due to the booming years and all this centralized finance capacity here in Hamburg. But if you look 10, 15 years further down in terms of age of professionals, there's very, very little coming afterwards, because after 10, 12 years of crisis, of course, lots of young people have decided to pursue different industries. And so I feel personally that the shipping industry overall, but also the shipping finance industry, has to look how can you become more appealing again, how can it become attractive for everyone to work in this industry. And I think here Oslo and Athens, if I look to Greek friends and Norwegian friends, there are a lot more people in my age who work in the shipping industry, in the shipping finance industry, and that's a bit it's a bit sad to see that there's not so many young people coming into this industry at this stage. So I do hope we can change that.
Max, if I look at Axel's team, some of the people are very young and very experienced at the same time, so I would not bother about that.
Let me add something that is an advantage of Hamburg in comparison, for example, to Oslo and London, is the cost of having a decent life for people is a lot cheaper in Hamburg than it is in Oslo or in London. In particular, London, of course, is extremely expensive. So we find it actually quite easy to attract good people, you know, at a reasonable cost. Yeah. Also, I mean, we're facing competition, you know, and so far cost for us is also an important factor. And we find it easy actually to attract talent, and people, you know, like to basically also live in Hamburg. We find it actually more difficult to find people in London, because the argument very often goes, well, you know, with the same type of salary, yeah, my life in London looks a lot worse. London is fantastic if you're very, very rich, yeah, but if you start a career, you know, it's a difficult place to be. And then so far, I see that I don't share the view that finding talented people in Hamburg in the next years will be a challenge.
And Elias, what do you think? Which role will the German ship finance banks play in the future?
Look, obviously, there has been a seismic shift in the balance of German ship financing over the last decade for obvious reasons. Having said that, what is very interesting is that different institutions have taken very, very different direction in terms of their future strategies. You know, you've got, HCOP that obviously is back in business in shipping. We can debate as to what the scale ultimately will be, but they're definitely in the business of financing owners. But you also have newer banks, and the best example is Braemar, where they have been very, very smart and innovative in effectively using other people's money to finance shipping projects. And it's really telling, and I think something like that could only happen in a city like Hamburg for all the reasons that we've mentioned before.
Mm-hmm. And we were now also speaking a lot about debt financing. Is there actually a general or appetite of investors to invest more in form of debt rather than in equity? Is there a certain tendency, Oliver?
Well, I would say that so we do not see, and maybe this is also based on our clients and the structure of our clients. There is no real like generic rule or like a common rule. The requests are the variety of the requests and the demand is that large that one really cannot classify it. Well, it goes from rather big scaled fleet financings on second-hand vessels, including cement carriers, quite niche assets, to what I described earlier, these three smallish shuttle tanker, product tanker, yeah, overaged, where 100% financing is required. So actually our experience is, and I do not want to promise and to over-exaggerate, but actually when you structure the request and what your client demands in the right way, you will find a source and you will find a debt provider, but no, this is the ever story. Every request has its price then in the end. So you do not get 100% on LTV or advance rate for LIBOR plus 200 or 300. So all in, you have to factor in 8.5. But nevertheless, it has his benefit and its benefit. So actually, I do not see a general or generic direction in the market.
Okay.
And from my business.
Okay. And Martin, do you see a certain preference or of your investors?
Well, I think for an investor who has been through cycles, being in the debt position is more comfortable because there's equity to buffer, and it's also a situation where you can ride a cycle easier. So if I want to convince someone to be in the 100% finance position, and the market takes a 10% dip for whatever stupid reason, it's uncomfortable. So from a senior lender or from a mezzanine perspective, you have a lot more patience and you sleep better at night. And if you compete well, you still have a good return for the risk that you take.
Interesting. And also when it comes to alternative lenders, I mean, in the last shipping crisis, we have seen that German banks were very patient with their borrowers. Will these alternative debt providers not be as patient and enforce much more quickly, also in the light of their limited investment horizon? How do you see that?
Me as well. I think that is not really a problem. So if you look at the banks and why they've been patient, sometimes they've been patient because in shipping you can just ride the cycle and everything is good. But sometimes they've been patient because they didn't have a budget for risk provisions, or there was a regulatory issue, or they needed to digest that over time. And that meant that at the end of the day, banks lost much more than necessary. And they may have been better off taking a quick cut initially. So it depends on the project. If you've done a project that is unlikely to ever recover, you probably made a mistake initially. And most funds that I know try to avoid that.
Yeah. And Axel, do you have your view on that, or Elias?
Well, I would say the spectrum is broad. There's different funds applying different strategies. Some, if you know them well, they have a loan to own strategy. That might probably not the first choice of a ship owner. This is, I think, it's helpful to really get familiar not only with the brand name, but also to understand a little what's the history. What are the individuals? What is their background? Are they knowledgeful? Do they have a view on the market? Can they hold on? And do they actually have a lending strategy and like to be lenders, or is loan to own basically just another way how to acquire assets? And insofar, I would say, there's funds that we've seen being very supportive, even especially over the last 9 months. We from March to I would say June in certain industry we had a severe cash flow crisis, and I must say a lot of deals that we have also refinanced with a variety of credit funds. Most of them actually behaved very, very reasonable. And insofar but that is not too different with banks these days. I mean, let's keep in mind 2009 was a time when you had such a big debt problem, you just could not solve it all at once in pure volume. Who would have been the takers on the other side? Or you would have completely crashed the market and crashed the balance sheets of the banks. But if you look today at the banks, there's also banks that, you know, take a calm approach if problems occur, and there's banks that take a hectic approach. So I would not say it's per se a differentiating factor of alternative capital to be less patient. And that besides includes also Chinese leasing companies. You know, some of the leasing companies have also been good at basically being supportive in crises, and others haven't. So the spectrum's broad.
Yeah.
I think if I can add, the basic situation as of today is quite different to 10 or 15 years ago. Banks tend to lend not on a quite counter-cyclical principle, but you know, stick to their advance rates irrespective of where the market stood, asset prices, employment levels, and so on. And this has entirely changed. So there is much more room and leeway for current alternative lenders, funds, and so on. Why they have had introduced and had applied counter-cyclical lending principles to what I would describe as to act and react supportive, but demanding. Yeah. So actually, but in a fair manner. So this is how I would describe the current status.
Yeah. Look, just to go back to what Martin was saying at the beginning, and obviously everything that was said about this is correct. We need to remember that alternative financing on average comes in at 10 to 20% higher LTV than what a bank would do. That requires a slightly different approach to how you see the relationship between borrower and lender. A traditional bank would call their borrowers their clients. Alternative financiers, and certainly us, would consider them to be our partners in this project. And ultimately, what we want is repeat business with borrowers who are good and are growing their fleets. So invariably, there is an alignment of interest to make projects work. That's the first thing. The second thing, it doesn't apply to everybody, but it certainly applies to us. You know, we happen to have come first from the equity side of the business and then grew into the debt side. That means that our credit underwriting team is actually physically on the same floor, sitting next to our commercial operations and technical teams. Anything that comes up, it's a very, very quick and knowledgeable discussion, which means that there is never any panic. And we can always have a very, very fast and speedy resolution to things based on their commercial merits. Again, I would refer to things that some members of this panel know already because they were involved. As long as you know, the borrower and the lender see eye to eye, it's not about patience. It's about commercial merit and economic win-win, if you like. And the proof to the pudding, again, I'm sure that Martin will confirm that, is 2020. 2020 was a very, very peculiar year. You know, it was a year of two halves, and it created tremendous amount of volatility in certain portfolios for alternative lenders. And again, by and large, I suspect, again, it's definitely the case for us, we probably exited the year in a better credit profile than what we entered it. Because again, you know, if you ask us what's the most important thing, is pick the right partner for each of these projects, and we were lucky enough to have done it. So
same on our side, Elias. The portfolio behaved exceptionally well, and I know most of my clients much better now than I did a year ago, and I feel that it's real relationships.
Yeah. Yeah, that's interesting that you're also, of course, referring to the year 2020, and yeah, then also when it comes to COVID, Max, did in a way COVID also pushed your business because you are more digitalized, you have more digitalization?
Yes, I think like with all other digital marketplaces and business models, I think it also helped us a lot. The whole value proposition towards ship owners to get, you know, access to 40 financial institutions on our platform by uploading a project within 20 minutes. I think this is much more valuable today than when you were able to fly around the world, propose your project, meet at conferences, etc. So on that side, we saw a good boost of deal flow. On the other side, but I think it's the same for the financial institutions, sourcing projects has become also harder due to the restrictions. So I think also for them, it's actually quite helpful to have access to deal flow in an efficient way. So overall, I think the whole value proposition of us has increased over 2020 and the travel restrictions and lockdown.
Okay, thank you very much. And also, I would assume that these alternative lenders have not the investment volumes or the balance sheets of the traditional ship finance lenders, like HSH with $30 billion and more. Question is now, will we see a fragmentation of the market? So many small debt providers or alternative lenders? Is that something we will see, Oliver?
In one of our mandates, and one of the participants here turned out then to be the financing party to that. We initially reached out to more than 40. We documented it to our client, to more than 40 globally 40 potential debt providers. So actually, when you talk about fragmentation, it sounds like it has a negative touch, and I just wanted to draw a positive picture. There is a magnitude of sources. Not all are suitable, and it quickly boiled down then to 4, and then to 3, and then in the end to 1 individual party who was extremely supportive and knowledgeable and what have you, and had this relationship approach in mind, which the client liked. But fragmentation is not negative. It's rather good, in particular for businesses like ours, right? So actually, there is fragmentation, and I think there's still more fragmentation to come, which is right. I would say a positive, more or less a positive impact.
Okay.
Yeah, if I may add, I don't see any shortage in ship financing volume on the debt and on the leasing side, even comparing it to the past. I mean, effectively, the world fleet is continuing to grow and the capital is there. I share the view that basically it's risk-adjusted pricing these days, and that means that on a variety of projects, you can immediately boil down the number of potential financing sources, to, I would say, 10 institutions that are competitive in that space only. But if you change the parameter of the project, and suddenly you say, look, I want 70% non-recourse financing, it's a totally different group that becomes competitive. And that is different. So I would say the volume is still there, but there's a variety of choices, and there's much more risk-adjusted pricing than 15 years ago. No doubt about that.
Yeah, just to add on that one, I think there's really no lack of capital. There's only lack of capital for small ticket transactions, and this is the only sort of place where I would see high fragmentation or growing, and hopefully there will be more players coming up that focus on the smaller ticket transactions.
The only people where we found that there is a lack of capital are people that have not a good standing. So if they are small, if they are big, there is someone who is willing to finance their project. But if they are having a history of fraud, a history of bad behavior, then there is no price for most people that they will judge them.
Yeah, if I may, I don't think that was what was implied, and I will agree that there is no shortage of capital generally in the world, and therefore it has also come into ship financing. What I would counter a bit, and I think for both Martin and me, it would be a bit of a disservice if we didn't mention it, is that actually setting up a platform which can be, exactly as was mentioned earlier, reliable, quick, and flexible in what it can provide to the ship owner is no mean feat. And there is a very, very long list of institutions that have tried to set up over the last 5-6 years alternative financing platforms that didn't scale up, and they didn't scale up for these reasons. So just something to keep at the back of our minds.
Thank you very much, Elias. One last question now to Cruz. Where do you see Hamburg in 5 years? Will other Chinese leasing houses follow?
Yes, actually, some of my colleagues from other Chinese leasing companies has asked me what's our feeling to Hamburg, and I tell them it's very good. And I believe at least 2 of them are trying to find a location in Europe, and Hamburg, I think, is on their top list.
Very good. Thank you very much. So thank you to all the panelists. I think that was a very interesting discussion. Thank you also to Capital Link, to Nicholas for making this possible. Thank you.
Thank you very much, Clemens. Thank you for sponsoring it. Thank you to everybody. Special thanks to Martin and especially to Axel, who has been tremendously helpful putting this together. And to Christoph Topfer, of course, and the group. Thank you to everybody.
Thank you. Bye-bye.
Bye.
Bye.